Hey everyone, welcome back to Corporate Decoder, the place where we translate all that fancy corporate jargon into plain English, and boy do we have some interesting numbers from T Connectivity. They are reporting their third quarter financial results, and let's just say there's a lot to unpack, especially when we look at their debt. Alright, so first off, T Connectivity, a big player in the connector and sensor world, has put out their report for the third quarter of fiscal year 2025. This particular filing is what's called an 8K, which is basically a way for companies to announce major news that their investors should know about right away. Think of it as a public announcement of significant happenings. Now, if you're thinking about investing or you already own some of their stock, the big deals are usually found in their financial performance, and that's what we're going to dive into. What's really interesting here is how they're managing their debt. They've got these senior notes, which are basically loans the company took out, and a few of them, like the 0.000% senior notes due 2029, they don't even pay interest. That sounds too good to be true, but it usually means there's something else going on. Perhaps they were issued at a steep discount, meaning the company received less cash up front but will repay the face value later. They also have notes like the 3.25% senior notes due 23. This tells us they are borrowing money for the long haul, and at a pretty specific interest rate. Companies borrow money for various reasons, like expanding their business, acquiring other companies, or just to keep things running smoothly. So the main event is their third quarter results. They put out a press release about it, and that's where the juicy financial bits are. They've officially released their report, and we've got a copy of that press release, which is like the company's official story of how they did last quarter. On top of the press release, they're also holding a conference call and releasing presentation slides. This is where you get the executives talking about the numbers and what they mean. It's always a good idea to see if their story matches the numbers. Now, while this filing is more about announcing that they've released their earnings and other related materials, it does give us a snapshot of their financial health through the way they've structured their debt. Let's think about TA Connectivity's business itself. They're in the business of making connectors and sensors for pretty much everything. Think your car, your smartphone, industrial equipment, even aerospace. When you consider how many electronic devices there are now, you can see why this business can be huge. They're like the unseen glue holding modern technology together. When a company like T Connectivity takes out debt, especially for long periods, it usually means they're confident about their future ability to generate enough cash to pay it back. The mix of interest rates like 0% on some and 3.25% on others suggests they're juggling different borrowing strategies to manage their costs. It's like finding the best deals on loans. Now, digging into the actual financial performance from their press release and presentation would give us the real story on revenue growth, profit margins, and how much cash they're actually making. But based on the debt they have, we can infer they're planning for growth and need funds to fuel it. Here's a general thought on companies that issue different types of debt like this. It often shows a sophisticated treasury department, which is good. They're diversifying their sources of financing and managing their interest rate risk. If interest rates were expected to go down, they might prefer variable rate debt. If they expect rates to go up, locking in fixed rates like their existing senior notes becomes a smart move. What's often said in these earnings calls is how the company is positioned against its competitors. T Connectivity is in a competitive space. Companies like Amphenol, Molex, and others are all vying for market share. The ability to offer competitive pricing, innovative products, and reliable supply chains is crucial. Their financial strength, which includes managing debt effectively, allows them to invest in research and development to stay ahead. So, while this specific 8K doesn't give us the raw financial tables to dissect right here, it points us to where they are. The fact that they are issuing these senior notes, and particularly that they have some with 0% interest, indicates a potentially strong financial position or very specific deal structures. It's worth remembering that owning debt, even zero interest debt, means the company receives cash that it can use to invest, grow, or return to shareholders, but it also means a future obligation to repay the principal. A key thing to always look for with companies like this is their backlog. If they have a lot of orders already confirmed for future delivery, that provides a very strong indicator of future revenue and the ability to pay back debt. Also, their gross margins are important. If they can produce their sophisticated connectors and sensors at a much lower cost than they sell them for, that's a sign of a healthy competitive business. When we look at these filings, we're trying to see if the company is growing its top line, meaning its sales, and also its bottom line, the profit. Are they able to manage their expenses, including the interest on their debt, and still make a good profit? Are they generating enough cash to reinvest in the business and pay back what they owe? Looking at TE Connectivity's position in the market, they are a foundational company for many industries. Their success is tied to the broader trends in electronics, from the growth of electric vehicles to the expansion of 5G networks to the increasing sophistication of industrial automation. The zero interest notes are particularly intriguing. It's not common for companies to issue debt without interest unless there's a very specific reason. It could be part of a larger acquisition where the seller financed the deal, or perhaps these notes were issued at a significant discount to their face value, which makes the effective interest rate higher than zero. Without seeing the full context of that specific issuance, it's hard to say definitively, but it's a signal that warrants a closer look at the full financial statements. Now for our take on TE Connectivity based on this filing's pointers. The company is clearly strategic in how it manages its financing, evidenced by the different types of debt it carries, including those with no explicit interest. This suggests a management team that is actively working to optimize its capital structure. Their strength lies in their fundamental position in the global technology supply chain. They are essential to many growing industries. However, a primary risk for any company heavily invested in debt is the potential for economic downturns to impact their ability to service that debt. If sales slow down significantly, or if interest rates for new borrowing rise sharply, it could put pressure on their finances. A clear conclusion from this snapshot is that TE Connectivity is a company that relies on borrowing to fuel its operations and growth. The details of how they manage that debt, particularly the zero interest notes, will offer more insight into their financial acumen and the true cost of their capital. We'd need to see their revenue growth, profit margins, and cash flow generation from the full earnings report to give a more definitive assessment, but based on the fact they are issuing debt, it signals an expectation of continued growth and investment. Alright, that's our initial look at TE Connectivity's latest filing. What's your take on companies using different types of debt? What do you think about those zero interest notes? Drop your thoughts in the comments below. If you found this breakdown useful, please hit that like button. And don't forget to subscribe for more deep dives into the world of corporate finance. And for even more exclusive content and discussions, join our Discord community. The link is in the description. Thanks for watching, and we'll see you in the next one.